Hello and welcome to Crypto Weeklies. In this video, we talk about Solana and its token Sol. None of the content is financial advice. Over the last 24 hours and over the last 7 days, Sol has rallied. It's the most rallying crypto over the last 7 days per this barometer analysis available on cryptoweeklies.com. 7 days leader up by about 11%. Again, it's available over here under indicators, under heat map indicator. And the link is on the bottom of your screen. It's available for free for all. So analyzing the Sol's price with respect to the technical levels, from the Fibonacci perspective, the recent drop that the wider crypto market had, which Sol also participated in, Sol found support at around 0.38 fib level at around $104. Now the price at around $124 is midway between the 0.38 and 0.5 fib level. If the bull rally were to continue, the key levels to watch is at around $134 level. That's the 0.5 fib level from the previous highs that Sol had. Again, they essentially were double tops from November perspective and also January 2025 perspective from 2021 peaks. So if the $134 level is held, the second level to watch for is $164, which coincides with the 20-week simple moving average. Again, it's a dropping valuation right now at around $176, and the 21-week exponential moving average at around $160. Both are dropping real fast, so they should offer some sort of resistance if the price actions were to meet those points. Again, historically speaking, again in 2021 and early 2022 especially, whenever the price in the initially tried to rally to that 20-week simple moving average and 21-week exponential moving average, the price action did meet with significant resistance, and as the price deflected away from the 20-week moving average and bottomed with a substantial gap between the price and the 20-week moving average, there was a counter trend rally. Potentially we saw the same thing in we are seeing the same thing since early April of 2025. So again, next levels to watch, again definitely not financial advice, between $163 $159 and $176 for Sol. Coming back to the machine learning based price forecast available on cryptoweeklies.com. The three scenarios forecasted over the next 6 months for Sol's price action with the trend on machine learning models such as seasonal, RMI, LSTM, and XGBoost. The base case between $133 and $165. The one standard deviation non-euphoria bull case for Sol between $146 and $313. These are weekly averages. So the last weekly average peak was at around $250. So if there is a 3 to 6 months bullishness in the market per this model between now and early to late July of 2025, that's if the bullishness were to continue for 3 months, that would take out the previous highs that Sol established in early 2025. On the other hand, if the market were to continue dumping, the next area of support between $74 and $118. So the purpose of this model is not to say that prices have to go up or down. They do their own thing using with respect to market forces and macro and microeconomic data. But what this model helps identify is what is theoretical ceiling and floor using historical data and machine learning algorithms and probability theory, or using these confidence levels. So the two standard deviation or the euphoria bull run case for Sol, the price estimated per the machine learning model in the next 6 months is between $160 all the way to about $530. So that is the higher end of forecast. Again, a conservative estimate for the euphoria case is a average of these two price points, a $313 Solana and 530 together at around 850, dividing it by 2 at around 425. That would be a realistic euphoria case or slightly conservative euphoria case price prediction for Sol at this point in time. So those are the machine learning based price forecast. Regression based valuation of Sol. This polynomial regression function does identify the fair value of Solana and stuff on Sol. Accumulating below the fair value, especially if you add a couple of residuals to the fair value. This is the first residual or one standard deviation residual applied to the fair value to identify the bottoms. The green line helps identify some of the best times to DCA sol. You can see per this model, we were in the accumulation zone in late March and early April of 2025. We did make videos related to sol at that point in time. Again, this is not just historical analysis. Again, we have made a lot of videos on this YouTube channel that we have related to sol. Again, as late as about a year ago, as well as you can see 3 weeks ago with the prices were in this bottoming pattern. So if you want to follow the progression of these crypto assets, you can give us a like and subscribe to stay updated with this forecast trajectory. So opposite of this one standard deviation bottom for sol is a one standard deviation peak. Together the price action stays between the yellow line and the green line about 68% of the time, or one standard deviation of the time. Above price action above this yellow line, usually if the market is not in a euphoria phase, meets with a downturn, and again the price eventually does go below the green line like it has gone now. The yellow line, or the one standard deviation peak for sol per the regression model, is all the way at about $512, which coincides with the machine learning based forecast for sol somewhere between $516 and $530 in the next 6 months. So that's a key area to watch. Not saying that price have to go there, but if it were to go there, that would mark a major resistance. The DCA, again, the regression model, the same model that was applied at weekly candle level, is applied in this analysis at a daily price action level, where per this model, again, accumulating below the fair value or the regression based line usually provides a decent risk reward. Again, if the hypothesis is only to DCA sol when the risk levels are let's say less than 10%, again that essentially you're avoiding DCA during the bubble phase of sol's price action. Right now, per this model, risk is at around 6%. If the risks go, again, there are no guarantees, if they go between 20% to 40%, like they went in the run up from December 2023 till March 2024, that could put price of sol between $285 and about $450. So that's the range forecasted by this model. A $285 sol to $410 sols from the current price of about 125 represents a 2.5x. So if we analyze the time weighted average price model, this model helps determine, okay, so this is for ETH, my apologies, for sol. This model identifies some of the best time to accumulate sol whenever the price is below the blue line, which is the time weighted average price. Helps identify a decent accumulation zone, at least historically speaking, 1, 2, and 3 times, where the price below the blue line offers a decent risk reward. Again, the time weighted average price for sol coincides with that $74 bottom predicted by the machine learning model in a bearish scenario. And also again, if we go slightly further down, that's where the 2.23 fib level is at around $68, roughly speaking, $6 shorter than the time weighted average price for sol. So with that, I would like to conclude by saying lots of forecasts covered the key levels as we introduced the $134 to $164 level, with some resistance along the way at around 20-week simple moving average. Longer term, definitely if the markets were to cool off, the key levels between the current price at around $75, base case between 133 and 165, close to that fib level, approach the bull case between $146 and $313 without euphoria, and with euphoria around the current price at around $520. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.